What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had another very volatile sell-off in the stock market with all of the indices down across the board. Is this stock market correction going for that next leg lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down over 2% and we finally did settle the debate on whether that is a dead cat bounce, and we can still see this is still just a dead cat. Our cat bounced and hit our resistance trend line, and our dead cat stopped bouncing, and now we're all the way back down on our support trend line just above 432. So remember, I always tell you to stay objective and follow the price action, and that's why I didn't want you getting overly bullish while we were in a downtrend. Remember last week I made that video called Bull Trap Dead Cat Bounce, because it's very possible these bull traps are there just to trick you as the market continues to go lower. So you cannot assume that this stock market correction is over until we break the downtrend. Remember, these bull traps are designed to trick you to come on in, the water's great, but then you find out the water's great because somebody peed in the pool. So this is not the time to be getting overly bullish as long as we're in this downtrend and we continue to see these dead cat bounces followed by the next leg lower. Now, it's also not the time to be getting overly bearish either, because we're currently sitting right on top of a very critical support zone. So from here, you still need to do what I always tell you to do, and you need to follow the price action. From here, you're looking for another potential bounce that could take us all the way up to close this gap, and we could get rejected at our resistance trend line yet again, and we continue to make these lower highs and lower lows as we march down in this stock market correction. And this trend can be very exhausting, and it can wear all of the bulls out, and even likewise, it's going to wear out the bears because some of the bears are chasing, and you have bears trying to short at support. Remember, you short at resistance and you buy at support. You need to be objective and you need to make sure you're on the right side of the trade. Now is not the time to be shorting because we're sitting right on top of support. And while we could break through that support level and go to the next support level lower, the odds are not in your favor if you're shorting at support. So buy at support, short at resistance, and continue to stay objective. Your critical support level to watch for last night was 441, and we gapped below that level, which is a very impulsive indication that we are going lower. And of course, we closed near the low of the day, and that indication was a correct call out. Above 441, we can start looking bullish again because that will likely be the breakout that takes us out of this trend and marches us back up to 446. So your critical resistance levels on SPY will be 436, 441, and 446, with that gap close level being right around 441.8. So those are your critical resistance levels if you're a bull that you need to see price action breaking out above. If you're a bear, you're looking for a break below 433, and that could send us back down to the next support level at 425. So something like a rejection at 433 and another leg lower could be another great short opportunity. Remember that I can't tell you which way the market's going to go, so you need to take all this information and you need to actually watch the price action during the day, and you need to make the trade that best fits your risk tolerance. Right now, we're still in a downtrend until we're not, and we need to break out and get back up towards that 446 level to start breaking this downtrend. Be objective, and if you're not sure what to do in a volatile market, you're much better off doing absolutely nothing at all to protect your capital and not lose money. Remember, we went down on increasing volume today, and anytime you're going down on increasing volume, you need to be careful for that elevator down scenario. Right now, we're sitting on support, so you're going to know very soon in tomorrow's trading session whether we're going lower or we're about to see another bounce. If we get a bounce, don't get tricked by another bull trap. You need to wait for a confirmation breakout to get overly bullish. Otherwise, you should be taking your profits at resistance. On the NASDAQ 100 triple Qs, we had another huge sell-off today going down 2.83%, and we did open a gap above that will fill right around 367.8. Remember, these gaps mean that we are going down impulsively, and that's what causes the gap in the first place with that gap down open. We closed near the low of the day, but we did close right on top of that support level around 360. Below 360, it's going to be a very quick trip to 354, and below 354, we do have our support trend line right around 352. Now below 352, the floor falls out and we're going much lower, and you can see the triple Qs got absolutely routed today on a huge volume sell-off. So this could be overdone selling, or it could just be the very beginning of a huge sell-off. So continue to watch that level right there at 360. To the upside, you're still going to have resistance at 365, the gap close at 367.8, and that 50 EMA right around 369. If we can see the triple Qs blasting through the resistance trend line and getting back up to that 372 to 376 range, we could start regaining a bullish trend and we could get back on the bull. But right now, it's a downtrend until it's not a downtrend. So you need to be objective and you need to understand we're still forming lower highs and lower lows. When you're in a downtrend, you want to trade with the direction of the trend because the trend is your friend. Trade with your friend and you will do well. If you use the bias of the trend, you'll usually be on the right side of the trade because the trend is in the direction that you're trading. So shorting at resistance is going to work until we break the downtrend. Buying at support also works, just make sure you're taking profit at resistance. On the Dow Jones, we were down 1.63% today, and the Dow Jones also opened a gap above that won't close until we get just above 348. We're going back down to our support level right around 341.9, and below that we still have support at 339 and 336.75. We need to break back above our 50 EMA just above 348 to break this downtrend, and then we could see the Dow Jones building up a bullish trend yet again. But right now, the Dow Jones has the full bear trend, so if we continue to lose support levels, the Dow Jones could go into a full-blown bear market. It is a bear trend, but we're still above support, so it's not necessarily a bear market. It could still just be one of those corrections. And remember, with the Russell 2000, we did see a lot of correction through time. So it's still possible we see the Dow Jones just do a nasty correction through time, and we just go sideways and ping-pong around this trading range. So don't get overly bearish unless we start seeing these support levels down here breaking down. Below 336, look for the gap close at 332. On the Russell 2000, we had a huge bearish candle, which is quite surprising because we were starting to look bullish. But again, the Russell 2000 has been doing this for many months now, so it's something we're all just getting used to. It's ping-ponging around through support and resistance, and it can't get a trend going in either direction. Right now, we see the Russell 2000 going down over 2.25% and closing back below that support level at 222, which means we could see it coming back down to 219 or 215. If we can break back above 224, this could be a higher low and we could go up to try to form that higher high. However, you can't assume it's just going to happen. You need to watch the price action at 222 and 224. If we can close above 227 and break out and close above 229, the Russell 2000 will actually be looking quite bullish and we will very likely have the full bull trend. If we break below 219 and 215, look out below because we're likely coming back down to 212, and below 212 we'll likely see the floor fall out and we'll go much lower. On the ARKK ETF, we were down a whopping 4.18% today, and we did see ARKK closing below all of our support levels, including the one at 112.7. That means ARKK could be coming back down to 109 or 106, and we do see ARKK is very close to having that full bear trend once that 20 simple moving average will cross below that 50 EMA. So this price action is looking bearish and we're very close to having the full bear trend, and we can see we did form a lower low today after getting rejected and forming a double top. So to me, I see a double topping pattern here where we continue to get rejected at this resistance level just below 126, and now we're breaking below the neckline. So if we get a second day in a row breaking below this neckline, we're very likely going to go a full move below the neckline, which could send ARKK much lower, and we could see ARKK coming all the way down to about 101 to 102. So watch this possible double top, but don't forget this could also just be a false breakdown. So if we can get back above 114, this could just have been a false breakdown. Otherwise, look for this potential double topping pattern that could bring the ARKK ETF back down to the low 100. On the VIX, we were up over 23% today, and we see the VIX breaking out yet again. Remember, the VIX was holding right around that support level, and we were still in that relatively bullish trend, and now we see the VIX breaking out yet again, which does tell us we could go deeper in this stock market correction. Remember, we had the confirmation that we were in the stock market correction with the VIX closing above 23 2 days in a row, and this was very likely just a bull trap after another leg lower. So we are getting that leg lower. It's just a matter of how low is that leg going to go. So watch the VIX closely. It's very possible that we do see the VIX getting crushed in the bullish scenario, and it will happen very quickly. So if we see the VIX getting back below 18.2 the second time in a row, it's very likely going to be the real deal bull rally, and we could get out of this correction. However, if we see the VIX holding above 18.2 and holding above 20, expect a more volatile sell-off and a continuation of the stock market correction. On Bitcoin, we're currently down about 0.88%, and we're very close to having the full bear trend if that 20 simple moving average crosses below the 50 EMA. Remember, we have strong support at 40,500, and below that, we're very likely coming back down to 37,500, and below 37,500, we're very likely retesting critical support at 30,000. Bitcoin needs to break back above 45,000 to stop the bearish trending and the bearish momentum, and we need to start seeing Bitcoin closing above 48,500 to get back on the bull. Right now, those are the critical lines in the sand, and it's neutral until we break one of those critical levels. Below 37,000, Bitcoin will look bearish, and above 48,000, Bitcoin will look bullish. Anything in between is a chop zone, and you can trade it off of these support and resistance levels shown. On Amazon stock, we were down 2.64% today, and we closed right on top of that support level at 33.11. If we close below this support level, look for the next support at 31.85 and 31.36. Otherwise, look for a bounce and retest of resistance at 3400 and the gap close at 34.52. If we get above 34.52, we still have resistance at 3500, 35.52, and the gap close at 35.80. Remember, we don't have a trend for the bears or the bulls, so you need to watch the price action at these critical support and resistance levels. On Tesla stock, we were down 1.74% today, and we did see exactly what we expected to see today with Tesla cooling off. Remember, we got way too far, way too fast, and we did hit that price target at 800, and we were closing outside the upper Bollinger Band, which is the perfect recipe for a cool down day or a pullback before we can go any higher. We came all the way back down to guess where? Support that we broke out of at 765, and that level did hold up as support. If we break below that support level, look for a retest of support at 751 or 732, and our 50 EMA is now at 721. If we break below 732, it will look like Tesla is possibly rolling over. Otherwise, you need to stay on the Tesla bull and look for a potential breakout to our next price target at 825. There's nothing on this chart that isn't bullish, and we continue to break out of resistances and bounce off support with the full bull trend. So I'm still very bullish on Tesla at this time until we break below 732. On Apple stock, we were down 2.38% today, and we did see Apple closing below 142, but just about 9 cents lower. So right now, it does look like Apple is coming back down to close the gap at 137, but it's still way too close to know for sure because we're just barely below support. So it's still possible Apple can bounce from here, but if it does not, look for that fall down to the next support level at 137. Otherwise, look for resistance above at 145, 146.6, and our 20 simple moving average at 149. Remember, Apple met our price target and could be going through a full-blown correction, so don't get overly bullish until we can at least break back above 147. On the financial sector, we were down 1.6% today, and we do see the financial sector cooling off a little bit and closing that gap below. Overall, this chart is starting to look a lot more bullish, and we did regain the full bull trend with the price action back above all the moving averages. If we see the financials going into a full-blown bull market, we could see the S&P 500 starting to rally from here. On the industrials, we were down 1.16% today, and we still see the industrials possibly going into a bear market with bearish price action and the full bear trend. We need to get back above the 50 EMA to snap the bearish momentum. The healthcare sector was down 1.71% today, and we do see a gap above, and we also do see a lot of bearish price action and building up bearish momentum. Watch to see if the healthcare sector is going into a bear market or if we can bounce and get back over that 50 EMA. On the energy sector, we were up 0.34% today, and we continue to see the energy sector looking very bullish. We had a very impulsive rally, and it does look like we could be due for a cool down to possibly close the gap below. But overall, we're building up a bullish trend, and price action is above all the moving averages. So the energy sector is still looking very bullish at this current moment. So jumping back over the S&P 500, you can definitely see there's still a mixed bag in the stock market. But overall, we definitely still see a lot of downtrending, and we do see a lot of sectors that are looking weak. We see a strong energy sector and a strong financial sector, but we're currently seeing a weak tech sector and a weak industrial sector. Overall, the healthcare sector is also looking very weak. So it's a mixed bag across the board, and we're still seeing a lot of sector rotation, and this is definitely still a stock market correction until we break the downtrend. When you're in a downtrend, you never truly know how low you can go, so you need to stay objective and watch the support levels, and you need to wait for a confirmation breakout above the downtrend to snap the downtrend before you get bullish. You could still make bullish trades, but make sure you're locking in your profits at resistance because we could still be getting lower highs and lower lows, and you don't want to take 1 foot forward and 2 steps back every time you trade because you will come out in the negative and you will be red at the end of the day. So look at the chart and understand you're in a downtrend, and don't be holding your long positions for way too long unless you're going long and you're accumulating for the long haul. Also, don't forget that I do have my own trade alert service called Bank Trade Alerts that only trades TQQQs, and it does very well in volatile markets. And I currently do have a 50% off promotion code for your first month, so now could be the best time to try out Bank Trade Alerts. You can find out all of the details about how to join and more about Bank Trade Alerts by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.